Good morning, ladies and gentlemen, and welcome to the show. Today is July 19th, 2019. It's a Friday. We got multiple things happening out in the world, a lot of stuff going on. So I got to get the show started right. We'll start the charts right here, and let's take a look first at the gold price. Gold, really, yesterday was a good day for gold. It hasn't really come down that much. It's come down a little bit, but it hasn't really come down that much. 1435 right now. Let's take a look at silver. 1641. Silver's actually holding the line better than gold. It's actually staying up better than gold. It's up 9 cents on the day. But this is expected because silver is so underpriced. And it's still cheap. Really. We haven't seen the market really take off yet. It's not. It's still on the launch pad. This is still on the launch pad. This hasn't really went anywhere yet. We're seeing silver price at $16.51 ask, and it's up 9 cents on the day. So this is good, Let's take a look at cryptocurrencies. Open the page here a little bit. Pull down. I don't know. This might be a little bit hard to see because of the color of it. But what you can see is this massive quick increase in price there. It took place in like a half an hour. I'll tell you what that was. What I think it was. Now, I could be wrong, but what it looks like to me, it looks like to me that somebody filled the wallet. Somebody just came in, bought themselves up a position in Bitcoin. And we were talking about a large player here, and filled their wallet. And now they got their wallet full. They're happy, and they're not buying any more, right? And they pushed the price up to where the level it is now. And what you see is, the price slowly declining actually here across the board. Now, what you probably see here, this little rise in price right here, this little jump earlier, which basically put us back right at the level we were. After we got that big increase in prices, probably a couple more little, probably a smaller person filling their wallet right here. That's what they're doing. They're accumulating right now. But the bears out there that drove Bitcoin back down from 13,800 back down to a price right here of 93.50. They're still there, and they're still at work, because you can see, if you take a look at the peaks here, this peak of 10,743, we can see a decline. Okay, so she's starting to decline again. I'll tell you, I would not be a bit surprised to see the Bitcoin price go along like this, doing this for the next little while. I wouldn't be a bit surprised to see a decline down to around 8,900, and then all of a sudden another big buyer come in. Maybe even the same buyer that just bought here, he might double down, and buy again. But it's going to continue to go along like this for the next little while until it gets ready for its next big leg up. And that's what it's doing. It's going along sideways. But there is something looming in the future that I have to talk about, and I'm going to talk about it later in the show, that could affect the price of Bitcoin big time, and also the silver and gold prices. Let's take a look now at cryptocurrency market capitalizations. 278.6 billion. Bitcoin dominance 56.7%. And naturally, you see all the coins mostly in the green today. Litecoin's $96.82. Ethereum's 216. XRP is 31 cents. I'll tell you about XRP. I'm not crazy about that coin. And the price is showing over the past number of weeks. It was like 40 some odd cents when I first started talking about I'm not crazy about that coin. Now it's 31 cents. So if you've invested heavily in XRP, you kind of taken a little bit of a beating over the last little while, because it's only 31 cents a piece right now. But I think that reason for this has everything to do with them holding 50 billion XRPs in escrow, basically, and the circulating quantity right now is 42 billion. So they're holding more than the whole circulating, and what all the XRP that's circulating, they're holding. bag holders. They're holding them back. 50 billion coins. And even the 42 billion they got out here in circulation is way too many. I mean, do you realize how many times Bitcoin's 21 million could go into 50 billion or 42 billion? You know? I'm surprised they're even worth 31 cents, to tell you the truth. When there's that many of them out there. They're not like Bitcoin. Nothing like Bitcoin at all. Bitcoin, there's only 21 million. A lot of them are going to be lost before it's all said and done. So, there you go. Let's take a look now at crude oil. Now, if you look over the last 5 days, you know what you see? It looks like a stairs. Crude oil's going down the stairs. Honest to God, it looks like a stair. Doesn't it look like a stairway? This red thing here, this red chart, doesn't it look like steps going down, 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 down? And this is with tensions in the Gulf are greater than ever. The United States shot down an Iranian drone. Pow! You know? It was bugging their ships. It's flying around. It was like you ever had you ever in a room and there's a big fly flying around, and a big one, you know, one of these great big flies. He'd go bizz, 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 bizz. This is what the drone was doing, evidently, around their ships, you know, and they just got sick and tired of it. They're like, get that blowfly out of the air. So Iran, what does Iran say? Oh, no, you never did nothing. What drone? Well, if they have that sort of attitude, knock a few more down and see if they say the same thing. I'm just kidding around, you know, guys, but that's basically, it's crazy over there. It's crazy over there. But, you know, if war were to erupt over there, this oil price would go screaming up. Honest to God, it would go so fast. Here we got to take up in price, and it would be enormous. Now, here's the Dow. We're going to have to refresh the page, see what she's doing today. At market open, she's up 99 points on the day. This market is more than frothy. This market has just been pumped up to the heavens. But now, you know, if you guys watch my show, you remember back a while ago, I was talking about a deflationary spike event. It's coming. Deflationary spike event. And then later, when the Fed started to change monetary policy, or talk about changing monetary policy, I started to say, gee, you know, maybe it's not so likely we're going to have this deflationary spike event because the Fed's already reacting ahead of time. Well, now a few months has progressed, and I'm starting to see that the Fed, their reaction is not enough, and they're behind the curve. So now what's happened is I can see that deflationary spike event that I talked about so much in my videos is back in the cards now. And if it occurs, it could quite literally take this stock market down. And I'm not talking in a small way either. I'm talking about probably the biggest sudden crash since the Great Depression. A sudden crash could occur in the stock market. Now, the Fed will react to that if it happens. But what could be the trigger? Well, you know, Deutsche Bank could trigger the whole thing, could trigger the slide of the whole world's economy, but there's an awful lot more triggers out there. And because all these triggers are lined up like dominoes right now, honest to goodness, we could have just the worst of the worst black recession, just horrible. U.S. Treasuries today, you know, this is weird about Treasuries, and I'll tell you why. And what I notice about Treasuries is I notice that the Treasury yields on one day, they climb, and on the next day, they fall. The next day they climb, the next day they fall. But they're not climbing as much as they fall. They fall more than they're climbing. And so we still got this inverted yield curve that's reaching all the way out to the U.S. 10-year. U.S. 10-year is less yield than the U.S. 3-month. You know, it's less yield than the U.S. 1 month. I mean, it's just ridiculous, this yield curve inversion. But the U.S. 30-year has been the only one that's been able to hold out. And it's still at 2.58. So that's the only holdout, is the 30-year. Now, let's take a look at the U.S. dollar index today. You know, if we do get this deflationary spike event, and it could be in the cards now if the Fed doesn't respond quick enough, and they are behind the curve, they're way behind the curve, because just a couple rate cuts isn't going to stop it. If we get this deflationary spike event that happens, it'll happen suddenly, out of the blue, and it'll be hard for the Fed and the world central banks to actually stop it once it gains traction. It's going to have an effect on gold, silver, and cryptos. And it's a little bit hard to identify exactly what effect that's going to have on gold, silver, and cryptos just yet until it actually happens. But I can tell you it will help to strengthen the dollar, because the dollar is the best fiat currency of the bunch. You know, it's the only, they're no good. All of them are no good. All of them are going to go to their net intrinsic value, which is zero, ultimately in the end. Let's take a look now at this. This could be a potential another trigger. You know, they've admitted it now. Now, you know, I've been talking in my show for months, going way back, months and months and months and months ago. I've been saying how Britain is going into a recession. You know? Well, they're finally catching up with what I've been talking about. Britain's Office for Budget and Responsibility said Thursday that the UK might be entering a full-blown recession. And a no-deal Brexit could more than double the country's budget deficit over the next year. The Office of Budget Responsibility said that the world's fifth biggest economy appears to have flatlined or possibly contracted in the second quarter. And the pace of growth is likely to remain weak. So basically, in layman's terms, they've got 1 quarter of recession already under their belt. Because they say here it's possibly contracted in the second quarter. So we just need one more quarter to prove that Britain's in a recession. I'm going to tell you, if the announcement is made that the United Kingdom has went into a recession, just that announcement alone, because it's the world's fifth biggest economy, will drag the rest of the world down into a recession too, because everything is all hinged in together now. They've linked the entire world economy together. It's not an individual economy. It runs like one big harmonious machine. I shouldn't say harmonious. There's no harmony to it. It's a monstrosity. You know, if it was an engine, it's an engine that's only hitting on 3 cylinders, and one of the pistons is coming out through the side of the engine block. That's what we got. Let's take a look now at companies are moving out of China to avoid Trump's tariffs. Are they going to the United States? Hell no! They're pulling out of China and they're heading into Southeast Asia and other countries in and around that region to avoid these tariffs. And they're building factories. They're actually shutting the Chinese factories down where they have been, and they're moving into other areas, and they're trying to find this is not working. These tariffs are not working to move so much factories toward America, because labor's too expensive in America. They're just moving into other places in Southeast Asia and stuff, you know. It says most of the companies that are stand to be hurt by Trump's tariffs are hunkering down and waiting because they don't know when or how long this trade war, I guess, is going to last. But they're moving. They're diversifying. It says they're diversifying production to Vietnam, Cambodia, Bangladesh, and Canada. But I don't think they're going to move as much to Canada as to Vietnam, Cambodia, and Bangladesh. And the reason why is because Canadian workers are expensive too. You know, just like American workers. But in these countries like Vietnam, Cambodia, Bangladesh, they can get cheap workers. So they'll be building the factories there. China, The factories are becoming out of China. China's going to go into a recession too. So what do we have? If we have China going into a recession, and we have the United Kingdom, one of the fifth biggest economies in the world, going into a recession, what's this going to do? But that's not all. Italy is turning over, you know. Italian assets are, what's the word they're using here? Crumbling. As Salvini keeps Rome on edge over early elections. And we can see the charts here. Look at the Italian yields rising. You know, on the Italian bond. Now, if those Italian bonds get too expensive, Italy's not going to be able to finance their debt. It's as simple as that. And, you know, this is a massive crisis in the making in Italy, too. The world's a mess. We're getting ready to go into the biggest economic contraction the world has ever seen. There's only one way out of it, stimulus. And when they go to that one way out, stimulus, they're going to destroy the fiat currencies. And guess who's waiting in the wings? Just waiting for the fiat currencies to start to be destroyed is the cryptocurrencies. They're waiting to take over. They've aligned themselves. They've positioned themselves. You know how many different kinds of fiat currencies we have in the world? Every country's got their own version of fiat currency. Well, the cryptocurrencies have made all of these versions to equal each of the fiat versions of the fiat currencies. So if you remove the fiat currencies, the cryptocurrencies are waiting in the wings, and they got a coin for every country. You know? They got a coin. I mean, they're ready and they're waiting. And so this is the direction the future's moving into. Let's take a look at this article here. This is what they're saying. Now, remember I told you the Fed's behind the curve? Fed shouldn't wait for economy to turn down to cut rates. Well, they've waited too long now already. They're behind the curve. I know they shouldn't have waited. They should have been at this when Trump said cut rates. They should have made a 50 basis point rate cut right then and there. And Trump said they should go into a new round of quantitative easing. They should have started it then. Now they've waited months, and they've let months go by. Meanwhile, what's happening is we've been going over Niagara Falls, and now the barrel's getting ready to fall, and it's too late to haul the barrel back now at this point. We're going to experience the fall of Niagara Falls. Listen, thank you guys for listening to this market report. Give me a thumbs up. Really appreciate my audience out there. And we're going to keep you guys informed of the latest of what's going on. Bye-bye, guys.